Hello and welcome to the market right here on ET Now. And what a day it turned out to be yesterday. Took all of us by surprise. Participation coming in from Reliance, ONGC, Coal India, L&T, what have you. And we managed to close above the 20 DMA for the Nifty itself. So we're back at that 21,850 print when it comes to the Nifty futures alone. And it was energy all the way, not just Reliance, but you had ONGC, some of the OMCs as well participate. That's the one which managed to hit a record high. And guess what? FIIs as well have turned buyers after a long hiatus of 7 days. Minuscule as it may be, only a 3-digit figure, but buyers nonetheless. So good news all across.
Okay, so what happened yesterday and what would be the impact of a brilliant Monday? That's what we need to understand. I think it's Reliance. And when a stock like Reliance, it moves, it just, in a sense, galvanizes the entire, market per se. So, a variety of factors why market moved yesterday. There was a bit of a definite comeback by FIs after what has transpired on the political front in Bihar. B, FIs are back, but this time around they are just not buying banks; they are buying different stocks. And C, there is definitely an element of pre-budget buying, which in a sense has been the missing link. Maybe it's making a comeback. Now, what has happened? Courtesy Reliance, Nifty has gone back. It's gone to levels which really matter. Are we in for a breakout trade just ahead of budget, and will it extend itself beyond budget? So I think if you take Reliance frankly out of the equation, the market may look very different. But why should you take a Reliance out of the equation? Because Reliance has done the trick. It was a bravo move in Reliance, and this was largely dominated by short covering and also by fresh buying, which seems to be kicking in. And when Reliance moves, it's a large stock, it's a stock which has started outperforming this year, then suddenly everybody will talk about the new leadership in the market. Markets have been bereft of any large leader because HDFC Bank has not fired. Reliance did show evidence of coming back, which it did, and now there is brilliant follow buying in Reliance. So I think it was only Vimal, the line which used to use earlier, only Vimal for the markets yesterday.
Yes, indeed. It was on fire. Use whatever adjective you want to describe it because it was your clear star performer in trade yesterday, seeing its biggest move since May 20th, 2022, contributing over 150 points to the move with the market cap actually past the 19 lakh crore mark. So that's the big star in trade yesterday. And, Nikunj, maybe I'm stretching that point a little bit further, given that the stock has never underperformed for 2 straight years since the year 2015. Do you think it can outperform in the year ahead, just going by the overall fundamentals?
It has all the elements which are there, which in a sense can ensure that for rest of the year, Reliance has potential to outperform the Nifty. See, for Reliance, you'll have to benchmark it with the Nifty. And last 2 years, the performance, including yesterday also, is just not very, it's not very strong. Now, typically, the Reliance has done well when they are nearing the end of a capex cycle, which is what they are for the new energy business. B, given that this would be a great year for the entire startup ecosystem in terms of new listing, I guess somewhere the entire potential of sum of parts for Jio should change. C, the retail business, I think, is firing full cylinders. Sooner than later, markets will start talking about a probable listing of Jio Financials or perhaps a probable listing of what may happen to Jio Retail. So that is not for consideration, but that is something which surely towards the second half of the year is something markets would talk about. But in terms of the specific move yesterday, and since we are talking about only this year and yesterday, there is no large trigger. Numbers did not give that trigger per se. So I think yesterday's market action was largely technical in nature because Reliance has been an underweight position for a lot of global institutional investors. Flows are making a comeback, and flows this time are making a comeback in differentiated stocks. Let's look at the flow picture, and I just want to make a point here. Aisha, there used to be a pattern when FIs were buying, they would buy banks and they would buy IT. There was a pattern when FIs would sell, they would only sell banks and IT and some consumer names. Right now, FIs have come back October, November, December, and they did not buy banks aggressively. And every time when FIs are selling, they're selling banks, but when they're buying, they are not buying banks. And there seems to be a big departure in that trend. you're not historically buying what has been your favorite sector, which is banks and financials, but you are buying different stocks. So on bad days when FIs are selling, banks are going down because they're selling banks, they're reducing the exposure to banks. But on good days when FIs are coming back, they are buying very different stocks on the consumption space, on the manufacturing space. I've also been told that PSU stocks are now finding mention in some of their FI portfolios. I never thought that would happen, but that is a churn which I think is evident, and that is a churn which we need to recognize and respect.
Oh, absolutely. And then, of course, you have the blue chip earnings, which we're going to react to today. Bajaj Finance, which was at best an inline set. And from ITC, you would have to say it was a little bit of a weak performance, even though the demerger has gotten a go-ahead. There's a dividend announcement. But asset quality, that's seen a mild bit of a deterioration when it comes to Bajaj Finance.
Okay, these are not wow numbers.
Yeah.
With Bajaj Finance, we are accustomed to using the word wow rather, freely. So these numbers do not warrant a big uptick in terms of earning estimates. B, there is a cost of credit or cost pressure on Bajaj Finance seems to be coming back. That I think is evident. But for Bajaj Finance, what is important is growth is intact. Unlike HDFC Bank, where growth got challenged, unlike HDFC Bank, where they would be conscious of bringing growth down to protect their margins, that's not the story for Bajaj Finance. It is still growing at 25% plus. And valuations are not like sky high in a market where you are bereft of a lot of good companies which are growing at 20% plus. Bajaj Finance is just north of premium valuations which actually it commanded pre-COVID. So the business has built up. Valuations are not that stretched. The stock is not at an all-time high, and I will not be surprised that in the near term, if one is looking at more money coming out of private banks into Bajaj Finance, that factor could be at play. I mean, I think the trade is very evident for rest of the day that it is going to be HDFC Bank versus Bajaj Finance, and if I do that comparison, for the moment, Bajaj Finance is winning hands down. ITC cigarette volumes were not great, but that is something which markets will see through it because of the base effect and other factors. Again, the stock could remain slightly lukewarm. The response to numbers will not be that great. But in my book, if ITC falls a lot, which is that you get a 5-10% correction, I think it's time to go back to ITC as part of your core portfolio, because the uptrend in their cigarette business, the uptrend in their entire FMCG business, paper business and hotel business, I think is real. And this time around, every time ITC tends to be this favorite budget stock, it's vote on account, guys. So I don't think anything should happen for ITC. So that again, in a sense, which has been the albatross around the neck for ITC ahead of budget, taxation, which is not going to change.
Yeah, although the cigarette EBIT growth has been the slowest on a year-on-year basis in several years for ITC, and that's what's really dampened the street, considering cigarettes as part of their revenues is the largest in the pie. But it's not done yet. You've got L&T as well as Dr. Reddy's too, and L&T is going to be quite critical a number to look out for.
It's still very cheap, Asha, and even the order flow is going to be flat. I think that from a market standpoint, this is one stock where again things are really fitting very right in terms of the old business, which is the road business, engineering business, construction business, and the defense business. On the IT front, look, I mean, markets know that the IT business for L&T on a consolidated basis is not doing that great. For me, it amazes me that everybody likes L&T, everybody loves L&T. They have great capital allocation. They managed to beat the numbers. They're very smart in terms of what they want to do, what businesses they don't want to do. The stock is not expensive. It's a well-discussed stock. It's a portfolio stock. Everyone's going to buy coverage on L&T. So I'm surprised that why the stock is not trading at the kind of peak multiple it should actually command. So from a market standpoint, expectations are not there. I don't think disappointment is going to come because the business is solid. So it could be like a routine event, maybe like a 2-3% swing here or there from an ITC standpoint.
Okay, that and Dr. Reddy's both will be closely eyed in trade today. But let's get a move on then and find out what the outlook is when it comes to levels. We've got our chartists with us, Kunal Bothra in the studios and Nooresh Merani joining in. And what a day it turned out to be. Kunal, let's get in a sense as to whether or not you're expecting this momentum to continue into the budget.
Good morning. So I think Reliance Industries was a surprise yesterday in terms of the move, and I think that propelled the indices back again above the key support points, rather the key resistance points earlier. So we were looking out for a breakout about 21,700 mark. That got completed on the spot levels yesterday. That was a comforting sign for the index. The premiums coming back towards 180 plus points for the Nifty, 160 to 180 plus points on a intraday basis. So that was also a positive sign for the indices. The Bank Nifty making a strong comeback yesterday from that sub 45,000 mark in terms of the key support levels where it was trading. Now, interestingly, there was mild bit of unwinding of open interest for 6% down in terms of open interest for the index futures. That generally indicates that maybe yesterday's move was also inclusive of more of short covering at the start of a fresh expiry week. So I would believe that this could be an interesting juncture for the indices. If we sustain this 21,700 mark, I think we should be looking at a breakout of a new high, 22,100 plus on the Nifty.
Okay, there you have it. Let's find out Nooresh's take then. And Nooresh, of course, the big boys really punched in their weight yesterday. How are you reading into the traction that we witnessed on the index with what the kind of handover as well that we've witnessed from Wall Street overnight?
So if we look at the whole world, we are hitting new highs on a lot of indices. So you have Dow Jones near all-time highs, hitting new all-time highs. Same is the case with S&P 500. Interestingly, if you look at the small cap index in India, we've hit a new or very close to a new all-time high. We've seen a much better recovery in the broader markets. In the index, finally, we saw leadership coming from Reliance Industries. So that's propelled the markets. But we are still yet to see a HDFC Bank or a Kotak Bank, ICICI Bank, Axis Bank, any of them take lead and make a fresh move. So overall, the bias is positive. Broader markets are doing much better. So the only way to ride this is once you pot on the current dip, keep a trailing stop loss and ride on to the move. And keep watching out for new rotations. So as of now, I'll be watching out for ICICI Bank, HDFC Bank, Kotak Bank for a bounce from here.
Okay, let's talk stocks then, although we've already set the tone for what supported the Nifty. But Kunal, what's on your list?
So I'll suggest two buying calls. The first one, of course, is from the banking name. But Bank of Baroda is something which I would highlight. The stock is on the verge of a breakout. It's more of a rectangular formation breakout on the hourly charts, more visible clearly on the hourly charts, about 230 plus levels, 233 plus levels on the spot basis. So would suggest a buy with a target of 250. Stop loss could be kept at 228. And Indian Hotels is the other stock which is completing a triangular pattern as well as a flag pattern breakout on the daily chart. So I would expect a small bit of momentum on the upside. 524 as a target for the stock, stop loss at 488.
Right. And Nooresh, what are the stocks on your radar?
So looking at two PSU names which have been relatively resilient as well as showing momentum. First is a buy on Power Grid. Continues to remain a stock which slowly and steadily trends. Yesterday hit a fresh all-time high. A defensive stock which continues to make aggressive moves. So out here, stop loss now at 245, target price of 275. Second is a buy on Container Corporation, which has made a strong base around that 820, 830 mark for the last few sessions. Same bottoms in that band and has made a recovery. And a retest of the breakout is also done, expecting a fresh move towards a new all-time high. Stop loss at 840 and a target price of 940.
Okay, there you have it. That's the recommendation coming in from our chartists in terms of their top calls for the day. Let's move right on then, and lots to watch out for by way of stocks and news as well. And we've got Anisha here to discuss just that. And let's discuss then the heavyweights and talk a little bit about the tale of the two financial giants, compare a lot of parameters when it comes to Bajaj Finance versus HDFC Bank, Anisha.
Yeah, and both looked, unenthusing and uninspiring in terms of numbers because credit cost has gone up for both of them as was expected as well. But there is the slight worry on the asset quality and some moderation in pockets of growth. But first, let me quickly run you through the key highlights as far as Bajaj Finance is concerned. It was overall a good quarter when it comes to AUM. In fact, it was the strongest AUM growth in the last 16 quarters. There was a bit of a miss when it comes to the bottom line, but that's because of the one-off impact of the regulatory changes. However, there was a bit of asset quality deterioration when the gross NPA ratio has worsened 2.95 versus 0.91, and the net NPA has also seen a bit of a worsening. The brokerages are a bit mixed for now. They're talking about how, of course, there has been compression on the NIMs, but this is lower than what the street was expecting. But they are worried about growth moderating, especially in verticals like rural, etc. But talking about the comparison that you were highlighting about, well, overall we have seen that for the growth parameters, that is the AUM growth or the loan growth, Bajaj Finance fares better with a 6% quarter-on-quarter growth versus 4.9 that we have seen for HDFC Bank. The NIMs, while HDFC managed to keep it flat, for Bajaj Finance we have seen a compression of almost 11 basis point. The credit cost has sharply kind of moved up for Bajaj Finance. It's up 32 basis point versus just up 1 basis point for HDFC Bank quarter on quarter. And if HDFC Bank saw that kind of weakness in the earnings, one is just worried of what can happen to Bajaj Finance today. But of course, on valuation, Bajaj Finance has come off quite materially. It's now close to 5 times forward earnings versus that 7-8 it used to trade earlier at in terms of the peak, while HDFC Bank is almost 2.3x in terms of the price to book. But Nikunj, I think the underlying factor remains that there is a bit of a weakness in earnings across the board of financials. There's niggling worry in the gross NPAs and credit cost.
Sinisha, you could compare Bajaj Finance and HDFC Bank with one simple benchmark, which is growth. And the growth for HDFC Bank in next few quarters and growth for Bajaj Finance, I think, is strikingly different. And Bajaj Finance, I think, is growing at a rate which in a sense is really enviable at that kind of a large base. B, unlike HDFC Bank, which also had one more challenge, which is that they were not getting a lot of low-cost deposit, which is their liability franchise was not getting built up. Bajaj Finance, being an NBFC, does have a huge advantage. Of course, when there is cost of liability, a war of liability in the system for a franchise like Bajaj Finance, the cost is going to go higher because the borrowing costs are much higher than what the industry average is. I don't think there is a large bloat up I can see in terms of their NPAs. And B, this whole stress that what will happen to Mr. Rajiv Jain, and will he continue will he be in a supervisory role, or will he be in a will he be charge of Bajaj Finance? Well, guess what, from a market standpoint, that's delightful that he pretty much would be at the helm. The stock is not very expensive, so the downside I think will get limited and restricted. Yes, the stock could see a little bit of pushback, given that right now the outlook for financials and the market reaction in financials is not strong. Having said that, I think it is not, in my book or in my assessment, it's not going to be a fiasco like HDFC Bank based on these numbers.
Okay, there you have it. That's describing the two giants and mapping out the kind of journey that they've had. Let's move right on then and discuss the next one, and that's Piramal Enterprises, and talk a little bit about the kind of numbers that they delivered. You still have the net loss at about 2,000 odd crore rupees, but the management confident of a full recovery in AIF investments.
Yeah, so if you look at the numbers optically, it looks like a very ugly set because of that loss that you talked about. But the management, as you pointed out, is saying that this is a one-off impact on account of those regulatory changes and the provision that they had to make. In fact, on the con call, they did clarify that a large chunk of that provisioning has already been recovered of sorts. So don't go by the net loss of 2,380 crore. The normalized PAT actually stands at 290 crores, which is 158% growth on a sequential basis, and of course it's a beat versus expectation when it comes to the normalized profitability. The consolidated net interest income is down around 19%, but again it's a one-off impact there. The AUM has actually managed to show a growth of around 6%. There's wholesale book which has grown 24%, but the massive jump has also come in the retail book of the company, wherein the AUM has jumped up by 54% on a year-on-year basis. And even if you look at the yields, they have improved by 30 basis points. The delinquency book is quite stable. So overall, it looks like it's a steady and a okay set coming in from Piramal Enterprises. And this is one stock that does react to, the near-term triggers and one-day moves of sorts. Where do you see this one headed now?
See, it has consistently disappointed. And when a stock consistently disappoints, if you get one strong, one glimmer of hope also that, okay, things are turning operationally and also in terms of write-off, the stock actually will stabilize. It's a very cheap stock. But the problem is that it has disappointed, and the write-offs, I think, have been very large. I don't think they're out of the woods yet looking at the operational numbers. I think their recovery process is still going to be a long road ahead. But I think the worst really seems to be coming down for Piramal Enterprises. I don't expect that markets just going to, based on these numbers, will come and again re-rate the stock. The outlook for financials right now is quite dim. But there could be an upside of in the near term purely based on the numbers and the fact that this is a cheap stock, and the positioning also for Piramal actually has just been fairly negative in last couple of quarters.
Okay, there you have it. That's Piramal Enterprises. Thanks very much, Anisha, for highlighting those stocks to watch out for. Tell you what, we'll take a very quick break right here on the show. Be right back as we continue our market talk.
Back with the market right here in 80 now. What a fantabulous move yesterday, led by Nifty Energy, which is already sitting at a life high for itself. The Nifty is well propelled higher all the way to that 21,700 mark on the Nifty spot. And guess what? We're already at 21,850 on the Nifty futures. And this morning, thanks to a decent handover from the globe, its own inertia as well, you are anticipating at least some amount of green to start off trade with. Although the GIFT Nifty has given up its morning gains, it was, I think, holding up another 100 odd points earlier today. But from there, it's flattened a little bit. But at least we're not headed in for a down start to begin the day. But let's welcome on board Sanjeev Bhasin. Sanjeev, hi, good morning. Can't take your eyes off from Reliance. What a massive 150-point contribution to the index alone yesterday. What's charging up Reliance?
Yeah, good morning, Aisha. So I think it's a born homie for the bulls and for people who are watching ET now. All the other channels at 21,000 is gone. Aisha, you have to have conviction. Don't ever underestimate the bull momentum in Indian markets. Yesterday, Dow futures were lower when we closed, but seeing the Indian momentum, they closed at all-time highs. So we are for once the trend changer or the trend leader. And yes, Reliance did take my breath away. I have been on the positive side that 20 lakh crore market cap will come. I think Nikunj will vouch for that. Sum of parts, do we think the unlocking of telecom and the retail business could be on the cards? They are one of the largest growing groups which is diversifying into the best of businesses after the OTC chemical or OTC business became cash rich. And I think, like we said, we never can underestimate that if HDFC Bank lags, then what will pull up the market? So we are going to be at new highs, and the side people on the sideline will keep waiting for corrections. This goes to show, Aisha, never say never to the stock market. And those same funds which were said we will never touch PSUs are actually biting their nails. NBCC at all-time high, GAIL at all-time high, ONGC at all-time high. I can go on. So keep riding the momentum, watch ET now and buy good stocks when the market gives you the correction.
And who better than you to give that list of good stocks? Tell us, what are your top PSU picks where people can still buy in and ride the wave?
So I still think NBCC, Hutco are going to give you a surprise on the upside. Nalco and GAIL are looking very good on the energy and the gas side, and so is NMDC. But Aisha, I think the star could be Indigo. I have been, again, as you know, I travel almost every weekend. Last weekend was Surat. This weekend was Ahmedabad. Flights are back and running. The lowest, the fastest change around time is Indigo. This quarter, the numbers on Tuesday will see a profit of more than 4,500 crore. Given that fuel prices have been low, traffic at all-time highs, wedding booking, there is not a single seat to stand. So you can imagine what the power of whenever a luxury becomes a necessity, that's the change which you have to look for. So I am very positive on Indigo, and I think that 3,500 can be on the cards once we get close to the budget. New highs are very much on the card. My other pick would definitely be Ashok Leyland. Again, the conduit from the bus terminal to the aircraft, and which is seeing the fastest expansion in buses, which they have not seen in the last 5 years, given the rejuvenation of schools, meetings, board meetings, and the demand for their EV side. And third, last but not least, would be again Dhanlaxmi Bank, which I have been recommending from that 38 level. I think this is one of the best banks to buy from downside Kerala, aside from the the PSUs which I've already said. But Indigo, Ashok Leyland, Dhanlaxmi Bank, and your Nalco. These should be outperformers.
Okay. What about your reading then on Vodafone in terms of the kind of numbers that we saw, the subscriber as well, the kind of subscriber addition numbers that we saw for the telecom space? Yes, you had the overall net losses for Vodafone narrowing in the December quarter. What did you make of that?
So positive, Avan, at least they have guided you that 2,000 crore is coming from one of the promoters. We will wait for more funding, but they are on the anvil of getting into 5G and they are gaining market share at the cost of the others in 3G, in 4G. I think their net ARPUs have been very, very strong at 145. And if you compare that with a Reliance at 190 and Bharti at 200, I think there is scope on the upside on that. And now for Vodafone, the only issue is the funding. As they've said, they have no obligation towards any bank which has defaulted. Their dues are mainly due to the spectrum and the interest charges which has been converted into equity from Government of India. So if you have the wherewithal to sit through, once the funding happens, the stock can be re-rated. We had a buy at that 10.5, 11. We also gave an exit at 18.5 when we thought the run-up was quite fast and sharp. And we will wait for more developments on the funding. The key here is, Avan, the funding, which will infuse capital and which will give them the wherewithal to go faster into the 5G space.
You know, Sanjeev, just taking a leaf from what you said, that the dominance is now back to the PSU names. What about the erstwhile financial favorites? HDFC Bank has clearly not participated at all. In fact, it's been on the downtrend since its numbers. And now looking at Bajaj Finance's numbers as well, there's been that mild dip in asset quality because of the personal loan slippages. You think the heydays for a Bajaj Finance, HDFC Bank are behind us?
Well, Aisha, like I said, never say never. Sometimes these opportunities are God-given. If you have a longer-term view, you know the brand which HDFC has and Bajaj has been, has always been stellar. And I think the asset quality, the overall branch reach out has been very, very dynamic. Now, these opportunities do come, but you know what has happened is market, because of over dependence by large mutual funds and those PMSs on these two stocks, they've lagged the broader market, and your performance is measured against the broader market outperformance. I mean, who said that the mid-cap index is again hitting new highs, which tells you that now you want to be in faster moving stocks, which in the short run can be beneficial, but in the longer run can be little more painful because they can be profit booking. I still think at 2.5, 2.8 times HDFC Bank will be a good play. I am more bullish on Geo Finance on a longer term, so I would give Bajaj a miss over here.
All right, there you have it. That's the view coming in on some of those heavyweights in trade. But Adani Energy is in the spotlight on the back of their quarterly performance. Anil Sardana, the managing director of Adani Energy Solutions, now joining us on the show. Thank you for taking time out. To begin with, can you just walk us through the earnings fine print for Q3? What has led to the growth in the quarter?
You will see the recognition of revenue in the later times. But yes, the good part is that we saw and registered two large transmission assets. One, the first maiden transmission line, 765 kV double circuit from Khavda, which is going to be a very, very large single location, in fact, the largest single location solar and wind farm in the globe. So this is the first evacuation system that we commissioned. And I'm very happy that today green electrons are flowing through this. The second is the very first maiden 400 kV grid in Mumbai, which is what we commissioned at Vikhroli. So Kharghar-Vikhroli line was charged and commissioned. And that's again a matter of pride for all Mumbai residents, that they will see much enhanced reliability coming their way by virtue of this 400 kV. The second part is, of course, the distribution business, which continues to be a steady state business, both in Mumbai as well as in the Mundra region. So it registered healthy growth. Losses continue to be at amazingly lower levels. Last quarter registered 5.46%. So it very clearly shows that we are running all our assets at very efficient level, not only executing them well, but operating them exceedingly well.
Right. Anil, you also talked about new assets being one of the earnings drivers. What else is expected in terms of new commissioning over the next 12 to 18 months?
So at this stage, we have a very healthy pipeline. As I mentioned, transmission line, we have orders, again, totaling about 17,000 crore, which are yet to be executed. Smart meters, I already told you that we have 18,000 crore worth of orders. Distribution continues to be adding steady state, about 1,500 crore of capex. So we will continue with our run rate annually, which we mentioned before. It will be about 6,000 crore other than smart meters. So once the smart meter kicks off, in the next 30 months or so, we will execute all the orders that we have in hand. And of course, the billing will happen on a monthly basis on an annuity concept. So we have very healthy pipeline, very good outlook, and very solid operations.
Naysayers are talking about how transmission capex has peaked. What's your take? And going forward, what would lead to the additional capex?
Let's first understand why in the last 2-3 years we had a lull. That was because most of the renewables was getting added in Rajasthan and Gujarat. And these two areas had a major area of concern in terms of Great Indian Bustard, which is a bird which was noticed by the environmentalist as on the verge of extinction. And therefore, the Supreme Court came in and said that we will have to holistically review whether lines could be one of the cause why the Great Indian Bustards are perishing. So after a lot of deliberations and their forming expert committees, etc., today the clarity has dawned on taking some of the precautionary measures like putting the bird diverters on the high voltage transmission system. But it's now clear that transmission lines at 66 kV and above will have to be overhead.
All right, thank you for taking time out and joining in. Good to have you on board. Sanjeev, let's get a move on and get in your take then as to what you make of L&T. What's the expectation? Because this time around, we're expecting the order flow to be a little bit flat. How are you looking at the quarterly performance and how L&T has performed?
So, Aman, L&T has been a core constituent of this rally. I mean, it has been the biggest legs to the market. And, quietly it has made its way to all-time highs, despite the pessimism about margins and so on. Margins have been strong. They've been in high double digits, which has never been the case for L&T for many years that I've tracked it. But if you see bonhomie on capex, it's across the board. Cummins, ABB, Siemens, you name it. Numbers will be taken with a pinch of salt. The stock is already priced in all the good news, but it continues to be the best play on the Indian capex, whether it's hydrocarbon, electrical, infrastructure, and only gathering momentum. So we think the stock is expensive and fully priced, but it is a core constituent given the outlook for the capex, like I said. So we think these 5 stocks, Siemens, ABB, Cummins, L&T, and Bharat Forge, are key players in this whole space and will continue to be market performers.
Reliance so chal gaya ji. Will Jio also go higher? Let's spend a minute on that. Kunal, Nooresh, Pasin Saab, look at the Jio intraday chart. Reliance is up 11% this month. 11% for Reliance this month. Nifty has done nothing. Reliance 7%. It's just been such an incredible move. 6% for Reliance. It's such an incredible move. But where is Jio in last 1 month? Jio has given returns of 4%. And yesterday's return was about 5%. Last 1 month return is about 7%. So Nooresh, illogical hai. Big boy has gone up. The subsidiary has to go higher now.
Different businesses now for both of them, but the price point which you would be watching out for is, say, post the listing of Jio Finance, the stock had made a high of 265 in September. And just roughly 10 days back, it made a top around that 265, 268 mark. And on the lower side, 230, 240 has been the base. So once it crosses 265, then we know that we've got into a momentum zone for Geo Finance. So for now, we are away from it. So too early to take a call. But that's a price point I'll be watching out for. Not much data technically to look beyond that.
Since up, Geo. Reliance has moved up. Will Geo catch up?
Is that for me, Nikunj?
अरे सर बसीन साहब तो एक ही है हमारे सबके बसीन साहब एक ही है जब चंदा
बिल्कुल,
मामा बोलते हैं
बिल्कुल।
एक ही चंदा मामा सबके मामा तो बसीन साहब भी तो एक ही है
Nikunj ji, bilkul. Geo Finance, I think, is made huge bottoms around that 200, 205. Now the unleashing of the business. See, the group is very, very bullish on intermediary and financial lending and the whole fintech basket. They are progressing extremely strongly. I met the Geo management sometime back in Amritsar at IM, and they were, very, very gung-ho on how they are, into lending of all sorts, with included insurance, AIF, and the whole gamut. So I think finance is not a problem. They've got a credible partner in Blackstone. And if anybody is going to take market share from Bajaj over a period of time, it is Geo. So, like you said, when last did you see Reliance move from 15, 16 lakh crore to 20 lakh crore? And the maximum period, maximum move has come in the last week. So it's been the balancing act for HDFC Bank's underperformance, and I still think Geo with a 2-year view is a must-have in a portfolio.
Joins us, co-founder with Green Edge Wealth. Digant, good morning.
Morning, Nikunj. Good to be here.
It's like a early morning breakfast buffet. There is so much to pick and choose from. What should we start with?
I think your favorite, maybe why are financials not performing? If that's not the
I've given up on that now because they are not performing. I've given up on that now. Digant, the only thing I can see now, this is just my personal observation, that when FIs are selling, they're selling financials. But when FIs are buying, Digant, they're not buying financials. Just think about it. I mean, yesterday FIs were there. They bought Reliance. Last October, November, December, FIs came in. They are not buying banks. So it is a very differentiated approach in which FIs are also now approaching financials.
Yeah, I think you're right. See, the last whole decade, there were so many FIs who just bought financials. So, FIs have a big overweight on financials as it is. And if the sector does not do well for a long time, I think they are also humans like us. They'll also have pressure to perform. And, slowly and steadily, they are shifting to other sectors, be it a Reliance, be it, the ABB, Siemens, L&Ts of the world. Because at the end of the day, they also have to respond to what the markets are. And if you see Nikunj, two things for financials, came as a negative surprise that, RBI tightened the retail lending norms significantly 2 months back. And then, you see this whole liquidity in the system getting tight. So I see that, both of these measures are, government's plan to ensure that inflation does not spike up before the elections. So, till elections, not much can be expected in financials. I think the glory time for financials, if at all it comes, it will be after elections, the large financials.
Let's compare Bajaj Finance and HDFC Bank. Two large lending institutions, but both have very different strategy, different growth numbers and different valuations.
Yeah. So see, HDFC Bank has been so much has been discussed about HDFC Bank, but we just have to understand that the backdrop for HDFC is not so easy as it was in the last decade. Last decade, 55% of the system, the PSU banks were not lending. ICICI Axis were in NPA problems because of their corporate portfolio. So HDFC Bank really had it easy in the last decade. This decade, if you see, they have to raise so much deposits to replace the HDFC Limited bonds, and then you have all the private and public sector banks. Everybody has good balance sheets. So I don't think HDFC is going to have it easy even after 3-6 months. We can say that okay, stock is the cheapest in the last 12-13 years and stuff, but I still think there is a bit of grind in this stock. That the finance, the numbers and the investors have to go through. When it comes to Bajaj Finance, I think they are delivering on numbers, as anyone would like. But again, 5 times, 6 times price to book. This is a market where there's time correction in such stocks. You see the same thing happening for Chola as well. They're delivering very well on numbers, but the stock does not go anywhere because 5, 6 times earnings is something which people really don't want to pay in this market. When a lot of other things are available. So I think Nikunj, financials is now a bottom-up sector, not a top-down sector for at least a few quarters.
Digant, hi, morning. Let's also get in your take then as to how you're looking at Dr. Reddy's in terms of what the expectation is. It's a big set of numbers and we're expecting an uptake in the profits and the revenues. If you had to, map it out within the entire pharma space, where does Dr. Reddy's stand?
Anna, unfortunately, we don't track these US generics. This space is, it's still not come into our radar because of the long struggle they had. So I'd really not be in a position to comment on Dr. Reddy's.
Maybe we're getting your take on what the brokerage community is reacting to when it comes to ITC, because the cigarette EBIT has been the slowest in several quarters across the board. There seem to be pretty positive ratings still on an ITC. How have you read into the quarterly performance?
Yeah, so see, I think cigarette benefited last year because everything opened up. In 2022 is when the physical economy opened up, 22-23. And we've seen some high base which has been made for all the cigarette companies, be it ITC or be it Godfrey Philip. VST continues to lose market share here. So I think there is a 3-6 months of lull which we'll have to go through. And once the budget does not have any tax increase for cigarettes, which I don't think should be the case. I think they can, again retweak their strategy and, look at 2 to 4% kind of volume growth. So I would just look at it as a temporary pause because of the high base that we have made in the last 12-15 months. We continue to remain bullish on the cigarette space, and Godfrey Philip is our preferred pick here because of the Marlboro brand which they have. And, Marlboro brand is the most premium cigarette that's are there in India.
Marlboro. They don't even have 1% market share. Digant?
Marlboro, right?
Yeah, they don't have a large market share, right? I mean, are they significant?
So Marlboro has only 3% market share, but Nikunj, if you look globally, Marlboro in the premium segment always has a very large market share, more than 30-40%. You look at all the developed countries. In India, it's not the case because we all know that in Godfrey Philip, there's a family dispute which has been going on for decades now. And then, when there is family dispute going on in the company, the attention on developing this Marlboro brand has not happened. So I see that as a big opportunity that Marlboro is just 2 or 3% of India's market share. I think it can easily go to 10% because, you look at the youth, they want, Marlboro is an international brand. They don't want a classic or a total or, these kind of brands. Marlboro is what really works for them. So I'm bullish on the long-term story, but obviously, as I said, the family feud is something we all have to live with in this stock.
449 rupees for ITC, 52 change, very impressive. Other stock which we don't talk about, I think, is Tata Power. What a run it's been for Tata Power. From Diwali to New Year, I think it's been a dhamakedar stock. Which is the best power stock to buy? I mean, Tata Power is a play on energy and energy transition. NTPC is a play on Indians will consume more power and they have large capacity.
I think, Nikunj, you mentioned that it's a breakfast buffet in the power sector. So in the power sector, there are these power generating companies, okay, the Tata Powers, NTPCs, NHPCs, SJVNs of the world, who are transitioning from just a fossil fuel based power generation to the renewable and, other sources of energy. So there is a lot of excitement there. But within this space, what we really like the most is wires, cables, and transformers. So they are, like a proxy play on the power sector. Like, if you have a solar plant, it needs 7 times the wiring of a normal thermal plant. So we are playing this through these proxies, the transformer companies and wire cable companies. But I think, even companies like, Tata Power, NHPC, or, in Engineers India, a lot of these companies are going to play a very big role in this energy transition that India is going through. So it's a very large buffet and, large investors can focus on the Tata Powers and NTPCs and power grids of the world. Mid and small cap investors can focus on the transformer or, the wire cable sector.
All right, let's get in a view on the charts then of some of the movers in yesterday's trade, in particular within the broader universe, and NBCC scaling up something like 11%. You had an NCC which was on fire yesterday, MMTC as well shot up along with PFC, REC. What's looking good on the charts, Nooresh?
So out of these names, a lot of them have really moved up quite a bit. So it's tough to take a call on the MMTC, etc., wherein the price action is the stock had gone up to 90, then again to 50, and now we are back to 80 odd levels. So I would be a little cautious there. In case of the names, NCC looks interesting because there is a secular trend across the whole infra name. So we have a NCC hitting new 52-week highs. You have a IRB infra hitting new 52-week highs. You have PNC infra. So the sector trend is pretty strong. So in that, NCC being one of the starting ones which actually broke out a few months back, still looks promising at this 210, 212 levels. So as a pack, infra has been doing well. NCC looks interesting at current levels. Would expect a move towards 240, 260. And as a trade, would keep a stop loss below 200.
Okay. That's interesting on some of those names. Digant's reading some articles talking about how now the air travel is back to pre-COVID levels as per some reports. Okay, Digant will be joining right back in. Kunal, any take on how the charts of an Indigo are shaping up?
It was missing, right?
Yeah, it was missing.
You can read without chashma.
Now I can.
So earlier you were, what about the chart? Should we revisit them?
So luckily,
Ulta to nahi dekha tha. You're sure, right?
Luckily, markets are not open.
Okay. But charts without glasses you can read.
Yeah, I can.
Okay, so
it's not, I mean, it's for more clarity. That's it. Nothing else.
So you want to have a look at Reliance again with glasses?
I'll still be very confident on Reliance. In fact, the net value for the stock is more than now 3,100 when you add back the Geo Finance price of I think 250 approximately to current price of 2,900 for Reliance Industries. And I think that's a dramatic comeback for the stock. We've seen, post results, I remember I think the stock actually corrected from 2750 odd levels to I think 150 odd points correction. So there was probably a sense of disappointment that maybe the stock would go into a correction like many of the other large cap names have in terms of results, post results. But then I think this comes as a very strong and a positive move, and this could probably trickle into the other stocks as well in terms of a larger construct of a move, that post results, even if these stocks deliver, say good results and the stocks are down 3-4 percentage points, that actually becomes a good buying point or re-entering point for these names. Coming to the prior question on Interglobe Aviation, I would still believe that it's been more of a consistent stock. So Indigo as a chart is more of a stock which tends to get into a strong, steady, gradual uptrend, sustains for a prolonged period of time, consolidates for months, when it tries to migrate into a higher range. Say, for example, 3,000 approximately had been a fresh pivot zone for Interglobe Aviation. And I think post that mild, or rather a time-wise consolidation, the stock tends to get into a further uptrend. So bullish on Interglobe Aviation even from long-term play.
All right, stay on with us. Lots more to talk about, but let's hear it out from Ramdev Agarwal, the chairman and co-founder at Motilal Oswal Group. He believes that the capex in PSUs is mainly government-driven. Let's listen in.
Government doesn't divest, yes, there might be some more stream because the capex which is happening is clearly government. Last year they did about 10 lakh crores of capex, and that is still not done. The orders have just been given. It's not implemented fully. On top of it, you'll get another 12-13 lakh crores in 24-25 budgets. So I think there is problem of plenty in terms of these companies, order book is concerned. How much they will execute, only time will tell. But I think the fundamental thing was that these companies were hated, like, as you said, it was hated, and they were all low single digit, not even single digit. They were low single digit, 3, 4, 5, 6 P multiples. And so when the whole market has gone to 23, 24 P multiple, you are at 4, 5. You're not so bad. You might be little inferior than, but there are enough bad private sector also. So I think there was a complete, disregard for the value underlying in these companies. I mean, they're monopolistic, very large. They can't be whisked away. And I think from there only it is coming. So it is a re-rating from bottom. That is, for 15 years, actually, if you see our wealth creation study in 2004-5, they used to have commanding heights in wealth creation,
yes.
45, 50%. It came to 0 in 22. Yeah. So from there it is rising. So I think there is a reversion to mean. So there is one portion which is reversion to mean, and other portion is whatever growth is there. So we should not, but these numbers don't come separately. So once the re-rating is done, reversion to mean has happened, say a company which is at 5p that has come to say 15p, that itself will give you 3x. So once that is done, then you have to see the merits of the company in terms of how the earnings are going to shape up and things like that.
Okay, Bajaj Finance is going to be one stock which is going to be in focus. Its earnings aside, it seems like there is a management rejig well in place. Remember, we broke this story about 6 months back as well to you. Ajay is here to revisit the story and how the case is pretty much now building up for a management rejig at the very top level, Ajay.
Well, that's correct, Aisha. You know, in fact, in the noise of the results, sometimes very finer points get missed. And yesterday, with the results, there was a very important notification coming in from the management side saying that Anup Shah would be made the Deputy Managing Director of Bajaj Finance. Remember, we broke the story in June of 2023 saying that Anup Shah and Rakesh Bhatt both have been made Executive Directors right under Rajiv Jain. And Rajiv Jain is actually grooming management, grooming and incubating leaders under him, because he himself is prepping for a very larger role going forward in a very gradual and a phased manner at the group level. Remember, there is so much happening at Bajaj Group as well. Bajaj Finance is, their housing finance business is becoming bigger. They've just launched a AMC which they want to scale up. So not that they don't have plans at that level. And then, of course, the mothership Bajaj Finance is already doing so well in the lending space and gearing for increased competition. So, but before he could actually move on, he requires to groom leaders under him, and hence the two executive directors had been, made. Now, we all knew in the industry, when you speak to leaders in the industry, that one of the two would actually be going further to the top role as a managing director or deputy managing director. And this is exactly what has happened. Mr. Saha has been promoted as a deputy managing director and perhaps readying for a top job at MD level. Rakesh Bhatt, meanwhile, has indicated that he would be carrying on for better opportunities. So it's a very crystal clear case of how leadership changes are happening at Bajaj Finance, and great organizations actually, plan their succession way in advance when they actually need it. They don't want any kind of a surprise or jerk at the company level operations, and hence it is very phased and gradual, and that's exactly when, what is happening. We can see it at Bajaj Finance. And when in June of 2023, when we spoke to the management around it, they did not deny it. They refused to comment on it, but they did not deny it. In fact, at some of the bigger conferences in Singapore and London, Rajiv Jain was heard, commenting that I am 53, I have age on my side, larger opportunities, if they come my way, I will not completely abandon Bajaj Finance, but will ensure that leaders are there, good leaders are there to take care of it. Of course, he will not deny taking of larger roles. So this is the direction, the entire story of succession at Bajaj Finance appears to be moving.
All right. Thanks very much for giving us a whole blowdown on the overall management rejig for Bajaj Finance. Meantime, let's get in a take then on the charts, and Kunal, just mapping out some of the big losers in the last month gone by, and they've been very heavily dominated by news. For instance, Zee Entertainment has declined something like 40% plus. You've also had a Polycab India, which has been one of the big losers, at least mapping out the 1 month returns. What are the charts of these two stocks looking like?
Well, they're still showing concerns for themselves. So even Zee, for example, I think when the stock had fallen down more than 30% odd, the stock was in the F&O ban. Immediately post that, in the next follow-up day, the stock came out of F&O ban, and I think 160 came back towards the zone where the stock found some support. There was a mild bit of bounce back, but those were just technical bounces, because the stock going into the F&O ban and then coming out of the F&O ban, start of the fresh expiry. So I think now it settles into a range, maybe 160 on the downside could act as a support for the stock. But then, these bounces are actually a point where traders typically initiate fresh shorts in case if the stock is not present in the F&O ban for itself. And I think so would be the case with Polycab. The concern with Polycab's chart is the resilience the stock is having now towards its 200-day moving average. So after that 3-day, 4-day sharp sell-off for Polycab, the stock had fallen down below its 200 DMA towards 3800, 3820 mark, bounced back towards 4300, 400 levels, but it's still given a major breakout or a confirmation of a breakout about this 200 DMA. So which means that we would probably have to wait out for maybe some more time for this bounce to sustain and the stock to break past about the key resistance points. I think till that time, I would probably just be on a wait and watch for Polycab as well.
Well, that's that in some of the EMS plays, but look at what's happening within the power sector as well. Just when you think the likes of REC, PFC, or for that matter, even NTPC, etc., have run their course, these stocks give you fresh breakouts on those days. And yesterday was no different. Look at how PFC, REC, both of them panned out, or how IREDA has been ever since its IPO. In fact, here's Kenneth Andrade telling us what he makes of the power sector right now.
So power as an industry is going to be very large. It's always been significant. Energy cost as a percentage to total sales would be anywhere between 11% to 15% of individual companies' cost lines. Okay, so it's a large industry, but now you have to play in the direction of that entire industry. But one thing is very sure, that power costs are going to be inflationary. Inflation is very good for company profitability. Profitability is very good for cash flow. Cash flow is very good for incremental capex. So you're in a virtuous cycle, and because you're in a virtuous cycle, these companies are priced at where they are at this point in time. I mean, obviously there is a space or two in the energy space which is reasonably priced. A lot of it is trading like it is a sunset business, and I'm just highlighting it. I mean, a lot of it is in the oil and gas space, and that's probably the only opportunity that is around there. But you've got to tread a little carefully, because valuations of those industries depend upon what you would assign a terminal value to those businesses. Okay, and if it's really a sunset industry, then you won't get a real price earning re-rating like you've seen with the rest of the power companies or the contractors that address the power companies.
PFC and REC. Nooresh, these are stocks which are done exceedingly well. If markets are looking at rotating, is the time to rotate out of PFC and REC?
So I thought we've created a short-term top, and we'll spend some more time when it topped out around that 420 mark, and say a month and a half, we've hit a fresh high. So the consolidation is done, and we are back into a trend. So it's been a difficult trade at current levels, but the trend is still positive. It's just that after the stock has gone up, say from 140 odd levels to 440 in the last 1 year, it becomes a difficult trade, but the trend is still pretty positive in PFC, REC. So technically, it would be difficult to call a top here anymore. But once we start breaking some levels, that's the point we'll see. But rotation as such we are seeing the rotation or momentum continue across power names, whether it is large or small. So would not try to time it in terms of a top.
Where is Bajaj Finance in the pre-open session? Let's look at it. PFC, REC, pre-open session, the rates are slightly immaterial. Bajaj Finance thought as much. I don't think these numbers like warrant an HDFC bank kind of reaction. I want to look at IDA. And I just pause when I look at that stock. 35 rupee has gone to 187 rupees, 6 times. Nooresh, I for one thought that closer to 100 rupees the stock had run its course. And 100 has become 180. Sometimes bull markets, they puzzle you. And they in a sense can just, remind you that don't try and preempt, the power, the brute force of liquidity and momentum. How would you approach railways in particular and IRDA in a specific name?
So railways as a sector is creating more like say a parabolic move which could top out, because it's not just about the price movement. It is the fact that we are seeing more participation coming from retail. For example, if you look at the shareholding pattern of IRFC, it has more shareholders than, it has almost 32 lakh shareholders, more than a lot of large cap companies, very old companies also. IRDA, a new listing, has relatively lower shareholding, but the stock has gone one way. We are seeing lower delivery volumes happen in a lot of railway names. The float is low. So in this case, the only way you could ride it is to slowly and steadily do it, wherein keep scaling down positions. But overall, looks like a case where there is over participation, and whenever the dip comes, it could be 20-25% from the top in a jiffy. So out here, I'll be very careful, look to book profits or just avoid the space.
Right. Okay, let's get in some mid-cap trading ideas as well on that note while we're counting down for some buzz and cover on the budget. Nooresh wanted to understand what's on your mid-cap list.
So continue like the whole power paper sector, which is a fresh breakout across the board. So the largest one being JK paper, others have also broken out. So expecting this to continue momentum towards 480, 500 mark, crossing in very close to that 440, 450, which is the previous highs of 2022. So expecting this to break out going forward. Stop loss at 410.
Right. Kunal, what's on your mid-cap list?
Well, that's a one KCP, a stock which I recommended earlier with a target of 200. It's come back towards 190, 195 mark, so very close to that breakout. But I would still believe that the stock should be good for more. It's now confirming a larger pattern breakout, a flag pattern, as well as a swing breakout pattern on the daily, weekly charts for KCP. Buy with a target of 220, and stop loss could be kept now at 187.
Okay, and as promised, budget, it seems, may give a further push to affordable housing. In fact, your channel learns from sources that the government may actually increase the corpus of affordable housing under NHP for cheaper fund availability. Ankur Mishra, my colleague, joins in with more details on all the buzz that he's picking up. Ankur?
Yes, sources say that government may come up with various announcements in affordable housing segment. In fact, sources have informed us that government is likely to consider expanding the scope of affordable housing segment. There is a consideration that government may increase the corpus of this fund. Remember, in 2018, affordable housing fund was launched with an initial corpus of rupees 10,000 crore, and 25,000 crore was supposed to be put in from players like SBI and LIC. Now we understand that there is a scope of increasing the limit of this fund. Apart from that, government had already asked for various suggestions from housing finance companies, banks, on how government can come up with the various announcements in the affordable housing segments. And one of the suggestions which has been given by the players is that government needs to give certain tax benefit for housing finance consumers, and especially in 80C, it should not be a clubbed benefit but an individual benefit. Apart from that, suggestions have also been given on interest subvention in credit linked subsidy scheme. Now all in all, government has considered all these demands, and there may be several announcements related to affordable housing segment, but sources have informed us that government may start with expanding the scope of affordable housing fund.
The government may extend also the lower tax rate benefit to a new manufacturing unit. And ET now has learned that budget may announce extension on 15% corporate tax for new manufacturing units beyond 31st of March. Prakash has got details.
Yes, we are learning from our sources that the government is likely to provide relief to the manufacturing sector in the interim budget. We are given to understand that the government is likely to extend the deadline to avail benefit of a lower tax rate of 15% for the company just starting manufacturing unit in the country. Company just starting manufacturing unit may continue to get benefit of lower tax rate of 15% beyond March 2024. Sources are saying that the existing deadline, which is going to be expired on 31st March 2024, likely to be extended for a year till March 2025. A very significant development coming in. Sources are also saying that the industry has been requesting government to extend the existing deadline beyond March 2024 in order to provide boost to the manufacturing sector. This move is likely to help India to become next manufacturing destination amid a complex geopolitical situation. As you are aware that the government had announced such provision in the year 2019 for the companies incorporated on or after October 2019 to get a benefit of a lower tax rate of 15%. But there was a condition which is with regard to commenced production on or before March 2023, which was extended for a year till March 2024. Now, we are learning from our sources that this deadline could be extended for a year till March 2025.
Okay, Prakash, we'll leave it at that. That's all the buzz that we're picking up on the budget. But Bajaj Finance today and HDFC Bank has been on the radar for a while. And today as well, in the backdrop of the Q3 numbers from Bajaj Finance, it takes precedence. In fact, in the pre-open rates itself, you're seeing a sharp cut on Bajaj Finance, about a 2.6% knockdown on Bajaj Finance. It's up that 7,000 print now. And HDFC Bank as well on the sidelines. You're seeing a tempered move on this stock once again. Here's Nikunj's take on both these names.
You could compare Bajaj Finance and HDFC Bank with one simple benchmark, which is growth. And the growth for HDFC Bank in next few quarters and growth for Bajaj Finance, I think, is strikingly different. And Bajaj Finance, I think, is growing at a rate which, in a sense, is really enviable at that kind of a large base. B, unlike HDFC Bank, which also had one more challenge, which is that they were not getting a lot of low-cost deposit, which is their liability franchise was not getting built up. Bajaj Finance, being an NBFC, does have a huge advantage. Of course, when there is cost of liability, a war of liability in the system for a franchise like Bajaj Finance, the cost is going to go higher because the borrowing costs are much higher than what the industry average is. I don't think there is a large bloat up I can see in terms of their NPAs. And B, this whole stress that what will happen to Mr. Rajiv Jain and will he continue will he be in a supervisory role or will he be in a, will he be charge of Bajaj Finance? Well, guess what, from a market standpoint, that's delightful that he pretty much would be at the helm. The stock is not very expensive. So the downside, I think, will get limited and restricted. Yes, the stock could see a little bit of, pushback, given that right now the outlook for financials and the market reaction financials is not strong. Having said that, I think it is not, in my book or in my assessment, it's not going to be a fiasco like HDFC Bank based on these numbers.
Okay, let's also tell you what the index strategies and the calls are this morning after that big spurt in the market led by the energy names. It's a buy coming in from Kunal and a hold from Nooresh on the Nifty this morning. What about the Nifty Bank strategy? That's where the weak bias is, but Kunal recommends actually buying Nifty Bank and it's a hold coming in from Nooresh Merani. So pretty much a similar strategy for both the Nifty as well as the Nifty Bank.
Nooresh, next 48 hours, 72 hours, markets will be volatile. Even though this is a vote on account, expectations from the budget are low, it could be just an extension of more like a, more like an allocation in terms of how to get through the year end. Markets will turn volatile. What is the best trade, which could be called as a budget trade according to you, only for traders?
So I would say in terms of budget on vote of account, the way I would look at it, has the VIX gone up going into the event? It's not gone up much. If we go into every other budget, there is a spike in VIX, which implies there has to be a lot of volatility. So the market is not expecting volatility as such. So the budget trade continues to remain to focus on the broader markets. That is where there is momentum. So there are so I would continue to focus on stock specific names and not look at budget, because the data doesn't say that market expects a lot of volatility from the budget as such.
Kunal, what is your assessment? Is there a pre-budget trade?
In fact, Nikunj, over the last 3 or 4 occasions pre-budget, we've actually seen the index falling, prior to the budget, but post-budget, the indices have managed to make a fresh swing high for themselves. So even if you look at the last 3-4 weeks of price comparison, from 22,100 for the index to almost 21,000, 21,200 for the Nifty, and then now back again at the midpoint of this 1,000-point range. I think post-budget, I would probably look out for a breakout of the previous highs of 22,100. So my expectation is that this is a good dip, good chance for index traders to build long positions.
Right. Okay, let's just revisit what some of the other stocks in focus are going to be. Bajaj Finance is seeing a bit of a sharp cut to start off trade with. Let's see where that stock is currently in trade and where it's settled in at. 2.6% lower, sub the 7,000 mark. This is going to be one of the key names to look out for. There's been a mild bit of deterioration when it comes to the asset quality. on account of the personal loan segment. Having said that, I also want to see what ITC is up to, because there too the cigarette volume a bit has seen a bit of pressure. ITC dipping much lesser, 0.6% is the kind of dip that it's currently seeing in trade. There's NTPC as well, by the way, which came out with its numbers. The EBITDA has seen a downtick of nearly 25%. Margins have seen a bit of a fall, 25.25% versus a comparable of 32% on a year-on-year basis is what they've actually seen for themselves. So that's the other stock, not falling a whole lot, just mildly in the red as we speak right now. Piramal Enterprises is the one where, of course, the NIMs also have seen a sharp dip. The NII as well has seen a bit of a slip of about almost 24%. That stock lower by 1.25% as we speak right now. Vodafone Idea, let's see what that stock is up to and whether or not the earnings are meriting any sort of a positive move. Yes, sure enough, 0.3% higher for Vodafone Idea as we speak right now in trade. And then, of course, there's a whole list of other names as well which are going to be in focus this morning. And let me just flag off some of those names for you, because they would be seeing earnings as well as news flow reactions. Some dhamaka earnings coming in from NAM. The PAT has seen an uptick of 38%. Restaurant brands, strong margin accretion in the India business. So that's going to be another stock in focus. And Venus Pipes as well, which has seen quite a bit of a positive number in the quarter gone by.
30 seconds to go. Will Reliance do the trick? Will PSUs make a comeback? You know, when markets get convinced that the downside is over, then the leadership, which is PSU, that automatically tends to come back. That's how the orientation of the market historically has always moved, in terms of the setup and in terms of the market positioning. 72,000 for the Sensex, 35 points higher for the Nifty. The market essentially are telling you that the small cap index is at an all-time high. Bank Nifty is now 7% away from an all-time high. First rates, let's just start zeroing on the first rates right now. In the first rates, any second, I'll let the wall do all the talking. 1,450 advances, 195 stocks which are declining. It's almost like a near perfect market breadth what we have. I mean, one day of a comeback in Reliance and the market get convinced that the leadership in the market which was missing seems to be making a comeback. You want to look at Bajaj Finance, Reliance and Jio. Why am I saying Jio? Because, I mean, let's be clear. It's a stock where right now the positioning is strong, but the earnings are not there. But will there be a rub-off effect of Reliance onto Jio Financials? Let's see if that happens. PFC, REC, these are two stocks which in a sense could be really called as the Wonder Boys, because they've just defied all laws of gravity. Defense and railways ahead of budget. No large change in allocation is expected. I mean, if at all, if the expenditure side of the government remains strong, then the road companies and the construction companies, some of them may remain charged up. But it's a neat start. It's a decent start. And for Bajaj Finance also, just when everyone thought that, okay, the reaction is going to be really harsh, I think it's not there. I mean, 5%. Financials are just getting clobbered in terms of what the post-number analysis is. It happened with HDFC, happened with AU, and now Bajaj Finance.
Oh yeah, quite a bit of sharp reaction, 4%